Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. We're back with another unscripted, more casual video that's likely to be a bit all over the place. Now, generally, I tend to focus my content on the stock market because that's where I work, it's where I have my professional experience and whatnot. But it's hard to ignore the carnage going on with our neighbor next door, the cryptocurrency market. You may have seen the Bitcoin, the sort of poster child of the area, has fallen back down to the $20,000 level, down roughly 70% from its all-time high. Ether's down roughly 77% from its all-time high. We've seen certain stable coins lose their peg, meaning that these coins that were supposed to trade at $1 has deviated from that amount, including Terra USD, which has completely collapsed and is now trading under a penny. Luna, the cryptocurrency tied to Terra USD, as well as some very high-yielding protocols, has itself collapsed and lost billions of dollars. Crypto companies are starting to have troubles with Crypto.com, the firm that famously hired Matt Damon to tell us that fortune favors the brave, equating buying cryptocurrency to being an astronaut. Well, they've bravely started to lay off employees and have reneged on their promises to their investors regarding cashback rates. Coinbase, the publicly traded crypto exchange, has itself fallen quite drastically and is also laying off roughly 18% of its employee headcount. And then there's the more recent news around Celsius, definitely not a bank that took deposits from some investors and lent them out to others and offered very high yields ranging from 9 to 18%, which has now frozen assets and locked up withdrawals, preventing people from accessing billions of dollars worth of their money that they have with their system, if you will. Now, any long-term viewer probably knows that I'm not the biggest crypto enthusiast out there. You know, I've made my thoughts known, I've shared my 2 cents before, but the intent of this video is truly not to dogpile on cryptocurrencies now that it's down. You know, that's not productive. And lo and behold, I don't like seeing people lose their money. You know, I know that there are obviously annoying crypto bros out there who will comment things like, have fun staying poor. And you know, they're probably not getting all that many tears with the current downturn, but I know for every one of those, there are hundreds, if not thousands, of other investors who are just trying to meet their financial objectives. But the reason I wanted to make this video is because people, when it comes to giving advice about crypto, haven't learned their lesson. We're still seeing people say, you know, buy the dip, Bitcoin's at $20,000, this is the chance of a lifetime to make it big, to be the next 18-year-old Bitcoin billionaire living in a $2 million flat in San Francisco. I'm still seeing posts of people who said we would be at $100,000 by now, telling people to go all in, to put as much money as they could, as well as clips like this one.
But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin.
That was Michael Saylor, the CEO of MicroStrategy, and it's a clip I saw shared by Nate Anderson of Hindenburg Research. And while I'm sure this was hashtag not financial advice, it's obviously very damaging and very reckless, if you will. And to be upfront, this is actually an older clip. This was from when Bitcoin was around $56,000. But that actually makes it worse when you really think about it. And so with a lot of people still willing to push not financial advice about cryptocurrencies, despite having no qualifications on that front, I figured it was time for another party pooper video. It's been a while. So I'll be quickly going over why cryptocurrencies have fallen so much and why they're at this depressed level, and then going and tackling some of the arguments I've seen that are starting to circulate about cryptocurrencies and what people should do with their money that I think have a lot of holes with them, that I think you should consider the arguments against these points before you make any decision when it comes to cryptocurrencies. But let's start with how we got here and why it seems like every platform in cryptocurrency seems to be falling apart around the same time. With the first point really being that when it comes to at least, you know, yielding platforms, or whether it be lending or staking, a lot of these high yields that would offer, you know, upwards of 10% returns for just depositing money into a system, they were always unsustainable. Now, some cryptocurrencies and platforms were fully aware that they couldn't sustain something like a 10 to 18% yield over the long term. And in many cases, it was done just as a promotional rate, if you will. But the problem is that many investors kind of saw this as being a risk-free and stable source of return that they could just deposit money into and that would regularly pay them this high yield, which, obviously at 18%, you're outperforming the stock market, you're outperforming many asset classes, all by simply depositing money into an account. It was clearly unsustainable and not something that should be relied upon, that was clearly taking risk in some form to earn that high return. And the reason for that is just the massive discrepancy between these very high yields and the regular yields within traditional finance. There are certainly going to be people willing to pay 18% for a loan, people who might not have access to lines of credit or even credit cards or whatever, who might pay that higher rate. The vast majority of people probably have access to cheaper forms of financing. And so you have this limited pool of people willing to pay that rate, and arguably a very large pool and growing pool of people willing to earn that rate. So when you have this, limited demand for these very high interest rate loans or high yielding loans, and you have all this supply, market factors will lead that yield to falling, right? You have all this supply, all these people demanding 18%, but only so much of that 18% actually coming in. It's going to lead to a lower yield that these people over here can actually earn. Someone has to be paying that 18%. Doesn't matter whether it's an explicit borrower who's paying 18% interest on a loan, or if it's the investors, whether it be money taken from the pool of initial investors to pay these high rates to attract more people for that promotion or whatever, or if it's taken from the value of the cryptocurrency because coins have to be printed, if you will, to pay people these excessively high rates of return. Eventually that will hurt the value of these cryptocurrencies, right? If you have to create more coins to pay this excessively high rate, well, a lot of people criticize fiat currency for that kind of inflation. It impacts cryptocurrencies as well. Now, outside the world of yield farming or whatever have you, there's also been these macroeconomic factors that have been applying downwards pressure on cryptocurrency valuations, right? We've covered it in past videos, including the recent stock market crash video. But one of the core things that's been influencing cryptocurrency prices is rising interest rates. Just this week, we had the Federal Reserve hike its own interest rate by 75 basis points, its highest jump since 1994. And rising interest rates not only reduce economic activity, they make debt more expensive, thereby discouraging lending activity, and which can discourage economic activity as, people face higher expenses and might not be willing to spend as much. It also can lead to a depressing of valuations of different investment classes, including stocks and yes, cryptocurrencies. Not to mention that, a lot of people were highlighting how money supply skyrocketed during the pandemic, which, it did. But you might not know this, money supply can fall too. It can contract. And in fact, it has been contracting. As interest rates rise, money supply can fall. Not to say it doesn't matter, not to say money supply still isn't really high. It's just, I don't think a lot of people knew that money supply could come back down. And finally, outside of those two things, there are the more idiosyncratic risks, like fraud, where there have been situations where because it's unregulated, because there's not a whole lot of oversight, there are platforms and there are cryptocurrency, systems where money has been misappropriated or, used incorrectly, and investor promises haven't been met. And so when you combine these factors of, unsustainable practices, economic pressures, and, instances of fraud, it's led to this growing investor uncertainty and pessimism in the space, even around cryptocurrencies like Bitcoin, which itself isn't at the center of some of these factors. But obviously, it's not just cryptocurrencies that are down right now, right? Some of these factors are macroeconomic. They're affecting the whole of pretty much all asset classes that are out there. Stocks are down quite a bit. The S&P 500 recently entered bear market territory, falling over 20% from its recent high. So it's not just cryptocurrencies. And because everything is down, a lot of people are saying that, look, this is just a downturn. Things will recover over the long term. We've seen it with the stock market. And obviously there is a chance that cryptocurrencies do recover and that they go back to their previous highs and, surpass it. But cryptocurrencies are not stocks. I know it's obvious when you say it out loud, but it's true. And you can't apply the same strategies inherently and trust that they'll work from stock market investing to cryptocurrency investing. It's not to say that there aren't similarities there. Obviously, when it comes to emotion management and all that stuff, of course, that applies to all investment classes. But cryptocurrencies are not stocks. Stocks give you a stake in a profit-generating business. Hopefully, if you did your research. And that profit generation gives that stock a sort of intrinsic value that it will or should normalize to over the long term, right? If you have this company that's generating $100 million a year in profit, but its price falls to a very depressed level, well, over time, if that company keeps producing $100 million a year, its price will, normalize to reflect that, because otherwise these investors are just making a killing buying at this very low rate and earning this very high profit generation from this company. Cryptocurrencies don't have that. They don't have that intrinsic profit generating based, level, if you will, that floor to their value that over the long term it can normalize to. Some people will argue that it does have some sort of intrinsic value tied to its utility, but on that front, that's a lot harder to quantify, and it hasn't necessarily proven itself on that front. We've actually had perfect use case examples pop up for cryptocurrency adoption. We've had Russian sanctions, we've had Afghanistan where people have tried to adopt cryptocurrencies to circumvent the Taliban. We've had El Salvador, which adopted Bitcoin as its national currency. It shouldn't have because it's down quite a bit, but it did. And the problem is these adoptions on the one hand ran into problems in some circumstances, such as with assets still being able to be frozen when they were used on exchanges, even though, to be fair, true cryptocurrency use can't really be frozen, but a lot of its utilization in the DeFi networks can, and they haven't led to that skyrocketing value of these cryptocurrencies because even though they have been adopted, the price of these assets had already been speculated up to a very high level. So yes, Bitcoin and cryptocurrencies might have value based on their utility, but that utility is very easy to replicate, as we've seen with the very many number of cryptocurrencies out there. There's this massive substitute in the form of traditional finance that offers many different alternatives. There's a very high learning curve and adoption curve for developing countries that might not even be able to get past that initial adoption phase. And there's the fact that the vast majority of people who own a lot of these cryptocurrencies, especially Bitcoin, don't own it for that utility of peer-to-peer money transfers, which was the white paper indicated purpose of Bitcoin. Most people hold it as an investment on the hopes that other people will use it for that utility and that will increase the value of the Bitcoin you hold without you yourself using it for that purpose. And if you view the utility of these cryptocurrencies as being a store of value, obviously it hasn't done a very good job there as well. If I told you that the US dollar was a store of value, but it fluctuated by 70 percentage points either way, you would probably say bullshit. Now, another thing I've seen a lot of people share is the 10-year price history of Bitcoin to show that the current dip is just, a minor contraction on its way, its trajectory upwards, right? And it's not a bad idea to zoom out. Most investors would agree that that's generally speaking a good practice. But 10 years is not really long enough to determine these sorts of trajectories. If you were to take a 10-year period of stocks during 1973 to 1983, you would probably come to the conclusion that stocks are a terrible investment because they didn't really do anything during that period of stagflation. And yet, we know over the very long term that stocks on average return roughly 10% annually. Not to mention that when you consider the context of that 10-year period when Bitcoin was first created, it really does show how much of an influence the environment has been on its performance. Bitcoin has quite literally never existed outside of a very supportive monetary environment. When the first Bitcoin was created in 2009, it was not long after the federal funds rate was cut to zero. And since then, it has only ever existed in a low interest rate environment. It's not a coincidence that Bitcoin started its rally to its all-time high within weeks of the federal government announcing its stimulus because of the pandemic. That it's reached this all-time high during a period of unprecedented monetary support in the form of very low interest rates and quantitative easing. So when we take away these supports, there's obviously a risk there that Bitcoin won't go back to those levels that were seen when those supports were there. And that's something that a lot of people seem to ignore, that a lot of people don't mention when they tell you to take out a mortgage and put all your money into Bitcoin, either because they don't know about it, because they aren't actually an expert on these things, or because they're just too blinded by the greed and by the belief that Bitcoin is the future and therefore it can only go up from here. Bitcoin might reach $60,000 and go past that point. But if you take anything from this video, it's to highlight that it's far from guaranteed. There are risks with Bitcoin and with cryptocurrencies. It is not a stock. It is not a profit-generating business. It is a speculative asset. Anyway, I'm done. I'll stop there before I go off the rails. If you want to buy cryptocurrency and you want to buy Bitcoin, all the power to you. The intent is not to discourage people. I just encourage you to, A, on the one side, manage your risk exposure. It is a risky asset, no matter what people tell you. And most people don't have the risk tolerance to, say, put their entire retirement savings into a cryptocurrency or into a set of cryptocurrencies. And yeah, just take everything you hear with a grain of salt. There's a lot of evangelists that told us that we'd be at 100,000 by now. And we're not. Anyway, thank you for sitting through my rant today. I really do appreciate it. And if you are, pro cryptocurrencies and Bitcoin, I'm happy to hear your counter arguments down below. The intent here is to have a conversation, a debate, to get us closer to the truth. It's not to try and prove people wrong. It's just to highlight the stuff that I think a lot of people are glazing over or misrepresenting when it comes to cryptocurrencies, so that you are more aware of the risks around it, and so you can make a more informed and rational decision. So thank you for joining me today. I hope you're doing well during these certainly uncertain times. And yeah, as always, be safe out there.